Welcome to Bears in Exile. Today is November 9th, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. You're going to hear a lot of bird screaming during this video tonight, so my apologies ahead of time as getting home late, and that makes birds cranky. So away we go. Okay, we had a great day from the bearish perspective, 389 points to the downside. We had said on the last video that bulls had certainly just pulled it out and had really an amazing day. Well, it has all come crashing down. We're looking for a test or a break of the previous high. We were holding off on any kind of bullish bets until that was done, and this is the reason why, because it's unproven, and certainly today the proof would appear to be in the pudding. Just crashed through the 200-day moving average to the downside. It's awful for the bulls, awful. We are having the cross of the middle Bollinger Band getting above the 200-day, above the short-term moving averages. We did have a downtick. It was resolved intraday. It was massively surpassed intraday. If we have one more day to the downside, maybe a side tick after such a big move, we will have the crossover of the middle Bollinger Band completely above the short-term moving averages. That is bearish. Being below the 200-day moving average, bearish. We do need a full body candle that's red below the 200-day moving average. It would appear that we're going in for a retest of the bullish forming bar. That's fine. And I think it would be more likely that we're going to go in for a retest of the major price consensus level at the least, which is 11,400. Now, above all, the most important thing today, I mean, you had the nasty news out of Euroland, you had some bad reportings, earnings, all that jazz. To me, the most important thing today was we have the downtick, the hook of the 14-day RSI moving average. We've been watching for this for, 2-3 weeks, waiting for it to hook. Today is the day, and that is fabulous. Doesn't mean it's going to be a rocket to the bottom, but what does mean that we should have a definite flavor in the weeks ahead, and that flavor should be down. It will pick up steam after it leaves the overbought territory, but nonetheless, as long as this is going to be going down, fabulous, absolutely fabulous, and it will take a massive amount of power to turn this sucker around. So that is why I've been looking for it, and we'll see exactly what happens with it in the weeks to come, but I do think that this is fabulous. Downtick on the CCI, downtick on the stochastics, downtick with the bearish cross on the MACD, downtick on the histogram, downtick on the RSI. 180 time period. You can see the 14-day RSI moving average, slight downtick at the end of the day, and yeah, it had leveled off some, but all it needs to do is continue its down move. That'll be fantastic. Downtick on the CCI, the stochastics, the RSI, the MACD histogram. Ugly in the 180. 60 minutes. Stochastics are low, 14-day RSI moving average, clicking down, CCI very low, downtick on the histogram, down on the histogram and the MACD itself. So this, to me, also looks bearish, especially with the 14-day having room to move to the downside and pointing in the downside direction. Now, the only reason why I'm looking at this is because I want to get a feel for potentials for further movement in the short term, and which is why we're looking at all of the other time frames. We're not looking for divergence because we already knew there was divergence in the 60-minute time frame from the previous video, which is now working itself off. So I'm not going to look at that again. And in the 30-minute time period, we still are pointing down on the CCI. The stochastics are trying to reset themselves, but look at that, 14-day RSI moving average. Still more room to move to the downside. We're getting some up movement on the histogram, downtick on the MACD, and hanging out in oversold in the RSI. And 15-minute last one, 14-day RSI moving average getting very low. Stochastics looks like they want to go down to the bottom one more time. Uptick on the CCI, uptick on the RSI, and working its way up on the MACD histogram. The point being, a pause while these reset is entirely natural, perhaps even needed in the short-term time periods. The 5, 15, and 30 are actually not bad looking charts from the bullish perspective, but those can't carry a day or a weekly chart. So I would expect some kind of a pause or even a slight move up before the 60, 180, and daily charts take over once again. Then again, there could be enough panic that the 5, 15, and 30-minute time periods aren't going to be strong enough to do anything, and it's just going to keep going down. But we shall see. SPX. We said yesterday it poked above and closed above the 200-day moving average, which was, of course, bullish. And we said we needed a full body candle above it, which we did not get. Came crashing down. Same thing as the Dow. We're getting the cross in the middle Bollinger Band above the short-term moving averages. We're already getting, with the real body of the candle, a test of the forming bullish bar, but we need to have the short-term moving averages come down and make contact with it and then break it. Notice the 14-day RSI moving average. We have the hook. That is massively important. Down on the stochastics, the CCI, the RSI, bearish cross on the MACD histogram. MACD, and downtick into negative on the MACD histogram. Very nice. And just like the Dow, 5, 15, and 30 minutes do not look bad for the bulls, but the 60, 180, and daily are favoring the bears by a wide margin at this point. The VIX. Oh yeah. We were saying that all this time that we needed to hold the 200-day moving average by the time the up move was finished. And if the up move is finished, which it very well could be at this point, but we need a little bit more, we have done that in spades. It has held magnificently. And although it has missed the psychologically important $30 mark several times, which brings into question the downturn possibilities, today was fabulous. Huge gap. We broke through the major price consensus level on the way towards the upper price consensus level. We broke the lower price consensus level for the previous month, and the short-term moving averages are moving up once again and have a flat line to overcome. Notice the middle Bollinger Band below the short-term moving averages, which should help give it some lift. CCI is getting very high. It is. Stochastics are turning up. Look at this, 14-day RSI moving average. We have the hook. We did identify it flattening out over the last few videos. So we finally have that hook. Uptick on the RSI, uptick on the histogram, uptick on the MACD, getting the bullish cross. Moving right along to TNA. Okay, well, it's hanging out still in the long-term moving averages. Either we're going to break away from them, or it's going to turn into a double flat line, which will be ugly. We are getting the middle Bollinger Band above the short-term moving averages, but this is a really close, just a bloody mess, hand-to-hand combat pretty much, because it is just hanging out and being a mess. We still have some formation of the bearish bar, and we do want to see that reform. We do really need to see the major price consensus level for this month taken out and the major price consensus level taken out for the previous month. That it will be a really good tell to see both of those taken out. They should be have something of resistance to them. Absolutely. And that is at the 42 mark and at the just above the 41 mark. So keep those in mind. Downtick on the CCI, getting the hook on the 14-day RSI moving average. Downticks on the stochastics. Downtick on the RSI. Downtick on the histogram. Downtick on the MACD. We do not have the bearish cross yet. UUP, massively important. We were a little bit concerned on last night's video about getting below the 200-day moving average that had held very well, and it was broken yesterday. Today, huge gap up. We actually gapped above the major price consensus level. We had said in the previous video that it really stunk, that we had attempted to test it more than a few times, and it had cropped out every single time. And gapping above it, you know, it's nice, but it also is not fighting it naturally, which is cheating. So in that perspective, I don't like that it didn't conquer it naturally. I do like that it's above it, but it did not fight its way through it. So that is not optimal in my opinion. And it did gap above the major price consensus level for the previous month. Once again, it should conquer those naturally, but it is what it is. We had said that we had the middle Bollinger Band below the short-term moving averages, and that could possibly be a tell. Now, today, in hindsight, yes, it was. Uptick on the CCI getting high. Upticks on the stochastics. We have the hook on the 14-day RSI moving average. We have uptick on the RSI, uptick on the histogram, uptick on the MACD. This is great. This is great. FXE. Okay, it's not a hammer. Its body is way too big, but it not only gapped through the major price consensus level for this month and the previous month, it also got through the lower price consensus level for this month, which is amazing. It's just great getting through both of those. And we closed right at the previous lower price consensus level for last month. Very, very interesting. It did pierce it with the tail, but it did close right at it. Downtick on the CCI, downticks on the stochastics, the histogram, the MACD, RSI, the all-important hook of the 14-day RSI moving average. You would expect that if this is a top, which it certainly appears to be, that now the question is what's going to happen with the floor. And that I would love for that to be tested. We have been saying on the daily running thread and in the videos for a few weeks now, 1.35 was the proper valuation for the euro, so long as the euro was not blowing up. Well, now we have questions if the euro is blowing up. We hit 135 today, and we were expecting overshoot. We should see that over the next few days, maybe the next week. But if they get all their stuff in order, which I'm sure at some point they will, either through reality or through fake stories, that 135 still should be the proper valuation. But if the news is proven correct and the euro is falling apart at this moment, absolutely 135 is overvalued. We said it in the past that this was on the wish list, not the shopping list, and now it very well could be on the shopping list, the previous floor. So now we are looking for the overshoot that we were expecting, and by the time that we get it, we should have information whether or not the euro is actually falling apart. And that's my spiel on Euroland. Moving right along to GLD, our second VIX. Interesting that the dollar's price moving up was such that it was able to give the VIX a fat body spinning top. We did get a downtick. Downtick has a target of 170, and kind of surprising that the uncertainty didn't lift it to be either smaller or even green, but it is what it is. The move in the dollar was huge, so I would expect some sort of a rush to gold in the not too distant future, but we shall see. We do have excessive separation. We do have some wobble, not excessive, but we do have some excessive separation. And middle Bollinger Band below the short-term moving averages, although it is moving into them, not just staying below them. We do have a bullish bar starting to form. You can see that this high over here almost appears to be an attempt at the previous major price consensus level, and was backing away from it. We do want to see it turn green and not only test that level, but break it. Downtick on the CCI, downtick on the stochastics, uptick on the 14-day RSI moving average, staying up high with the RSI, downtick on the histogram, uptick on the MACD. And the other question is, with such a big hit, do people liquidate gold in order to cover positions? Yes, they do. Maybe that explains the red candle today. But regardless, it is what it is. SLV, also a decent-sized red candle considering all of the sizes of the real bodies of the candles for the previous week and a half. Downtick on the CCI, downtick on stochastics, 14-day RSI moving average actually getting to overbought. Downtick on the RSI, downtick on the histogram, side tick on the MACD. We still have the middle Bollinger Band below the short-term moving averages. We had a downtick today. It was resolved intraday. We are still wearing away at the bar. Now, it would be really nice to have a test of the 200-day moving average by the time this up move is done, and when everything needs to reset, if it's able to stay relatively in place. That's what we're looking for. We want a test of the 200-day moving average. We want the bearish bar to be completely collapsed into a flat line, and then we want it to hold. That is the synopsis of what we're looking for, or at least what I'm looking for, and we're going to see what happens. Certainly, if it breaks the 200-day moving average and we have a cover rally in silver, that'll be fantastic. I don't know if it's going to happen in the short term. And there it is. There is the market overview for tonight. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.